I know we've talked a little bit about a few of these items, but on the business side, what we start with our review process is previous 3 years of business tax returns, year-to-date profit and loss and balance sheet. If you're an existing business owner, we'll look at your existing business debt that you have to see if there's any ways we might be able to save you money with a refinance opportunity, or just to make sure we're accounting for all your monthly debt obligations for the business in our cash flow analysis. And then again, accounts payable and accounts receivable reports. And then on the personal side, previous 3 years of personal tax returns, we'll look at your personal financial statement, personal credit report, and then we also run a personal bankruptcy search.
Can you talk a little bit about refinance options, stuff like that? I am acquiring, right? And so I'm going to have 3 or 4 different loan payments. And it would be great to consolidate my debts, but it doesn't really seem like a great option.
Yeah, I think our bank and myself, I think we're brutally honest. We're very transparent. We're not going to try to refinance debt if it's not in your best interest. So say if someone locked into a rate in 2020, probably not a really good idea to refinance with today's interest rate environment. So we'll just say, hey man, good job securing that loan, great interest rate. I would recommend holding that as long as you can. But if we do see opportunities, we will say, hey, it looks like your monthly payments are this. I think we can get you to this. Here's the cost associated with the refi, and this is kind of what it looks like. Essentially, though, in a nutshell, SBA requires us, we have to save you at least 10% on your monthly payments. So say you have like 3 different acquisition loans that you want to consolidate into one. As long as we can save you 10% on your monthly payments, we'd be glad to refi those. And also tying into that with, if you bought companies via seller financing, we cannot refinance the seller note until 24 months of principal and interest payments have been made. So I know that's a way a lot of deals get done in this industry, especially for smaller deals, is a seller note or handshake agreement. We do have the ability to refi those, but again, they have to be in place for 24 months.
So 24 months of the SBA loan or 24 months of the seller finance?
Seller financing.
The seller finance, okay.
Yeah, SBA, I think we can take out whenever, as long as we can save you 10% on your monthly payment.
Got it, okay.
And then with refining an SBA loan with another SBA loan, oftentimes we have to get a letter from your current SBA lender saying they can't match the terms of what we're offering. So that's another kind of thing that plays into it. But oftentimes it can be difficult to refi SBA debt with SBA debt, just because most rates are going to be pretty similar. So kind of hitting that 10% threshold can be a little tricky with that.